Hello everybody, welcome to another update on the stock screener. Today we're not going to talk about stocks, but about gold. There are people who think that gold is topping out, and other people think that gold is going up. So you can see here how gold is doing. Maybe this is a top and we will go back down, or will it break out and go to new highs? Well, there's an easy way to look at this. So what should the real price of gold be? Okay, there are two ways to check this. And the first way is by looking at base money. Okay, so base money, that's actually this curve, the red curve. And when you add all the base money together, then we're around, let's say 25 trillion, right? So here it is 25 trillion. When you add all the base money together of all the central banks. And as opposed to that, you can look at the gold reserves. So the global gold reserves are at 1.3 trillion. So we now know what the gold reserves are, 1.3 trillion, and we know what the base money is of all the central banks. So what we want to have is that we assume that the central banks hold around 20 to 40% of gold on their central bank, right? So let's say 20%, then you can actually make the calculation. So we have 24 trillion and we take 20% of that, then we have around 5 trillion that needs to be in gold, right? Now, the gold reserves were 1.3 trillion, as you can see here. So we need to go times 3.7 to go from here to here. So that means that gold price should be around 7,000 per ounce. Okay. So that's the first calculation. This chart should go to $7,000. So this is the first valuation. You know that gold is going higher. Now the second valuation, and I watched a recent video with Maneko and Belang P, and they are saying that we should calculate gold against currency in circulation. Now let's do that. So what is actually the currency in circulation today? And we are only looking at the United States. So today it's at 2 trillion. You can see that here, 2 trillion currency in circulation. And let's see what it was in 1980. It was around, if I can get this chart here, let's zoom in a bit more. I want this line. It's making it very difficult for me. Okay, so here, okay. So currency in circulation was around 200, and that's in millions, I think. So it's 200 billion, right? Around 200 billion. Yeah. was the currency circulation. So around 10 times less, right? So now it's 10 times as high. So this has gone up 10 times from here to here. And yeah, let's take a look at what the amount of gold is on the balance sheet of the Fed. So we can go here and look at the gold certificate account, which is 11 billion. So this is 11 billion, right? But you need to know that the gold on the Fed's balance sheet is valued at 42.22 per ounce. So actually you need to divide it by 42.22 and then you multiply it by the current gold price. So let's do that. So 11 billion, okay, we divide it by 42 and then we do it times the amount that the gold price should be, and then we get 2 trillion, and that gold price is 8,000. Okay, so the gold price would need to be revalued to 8,000 in order to get the 2 trillion in currency in circulation. You can do this calculation yourself here. It will give 2 trillion. So we have now two numbers. One is 7,000 and the other one is 8,000. So that is eventually the gold price that we will need to have balance in this world. So you are going to see much higher gold prices than 2000. This is probably going to triple. Now, another very interesting thing to know is this peak here. So that's the peak of 1980. If you do the calculation of this here, and you use the 850, this 850 here, then you get 200 billion. 200 billion, and you recall what's this 200 billion? The 200 billion is exactly this 200 billion, 200. And that was the top in gold in the 1980s. So here you get the same amount of gold certificates that the Fed held, and compared to the gold price, it was 1-to-1, right? The amount in circulation and the amount of gold on the Fed's balance sheet is 1-to-1 here. We are going to see this happen again in the future. It will go 1-to-1 like this. Actually, this chart is probably this here, what we are seeing right now. We're probably somewhere here, right? We got this cup formation, that's this cup formation, and then we will go back to the 1-to-1 valuation, and that is about a triple from here, 200 to 600 as a triple. So here we are going to see another triple from the 2000 to 6000. That's exactly the same curve that we are going to see here. And this is going to happen in 1, 2, maybe 3 years. In 3 years, gold will be at 6,000. And I'll see you in the next video. Bye.